Today, our group will present about the importance of the financial inclusion and the factors to increase the level of the financial inclusiveness in Malaysia. So today, I will start with the introduction of the financial inclusions. So what is financial inclusion? So financial inclusion means everyone can access basic financial services like bank accounts, savings, loans, insurance, and also a digital payment. So it is important because it helps people manage money and also face emergency, and it improves their quality of life while also strengthening the country's economy and reducing poverty. So, in Malaysia, financial inclusion has improved compared to the past. And before this, many people in rural areas had limited access to the banking services. But today, with the support from the government and the Bank Negara Malaysia, digital banking, e-wallet, and system like Do It Now make financial services easier and more accessible. Now, we can see the improvement through the indicators, such as more adults having the bank accounts now, and then higher use of the digital payments, and better access to the financing for the small businesses. However, continuous effort like improving the financial education, the internet access, and also the affordable financial products are still needed to ensure everyone can be included in the financial system.
Next, we continue with the importance of financial inclusion. Financial inclusion plays a crucial role in promoting inclusive and sustainable economic growth in Malaysia. It helps improve living standards, reduce poverty, and narrow income inequality by ensuring that all income groups can access affordable and quality financial services. Bank Negara Malaysia support this through initiatives such as National Financial Literacy Strategy 2026 to 2030, which focuses on underserved groups including underserved rural community and entrepreneurs. Furthermore, the rise of digital banks and the use of alternative data are opening doors for those previously turned away by traditional institutions. In shortly, financial inclusion strengthens economic resilience, support SMEs, enhance customer protections, and contribute to long-term economic stability in Malaysia. Next is the current level of financial inclusion. Based on the Principal Global Financial Inclusion Index 2025, which was reported by FinTech News Malaysia, financial inclusion measures the extent to which individuals are able to access and use financial services. The index focuses on three main pillars, which are employee support, government support, and financial system support. The progress is measurable. In 2025, Malaysia showed improvement across all three pillars of the Financial Inclusion Index. There is a 0.8 point rise in employer support, 0.7 point increase in government support, and 0.1 point increase in financial system support. While many nations are seeing a decrease in this area, Malaysia continues to make steady progress in every single category. The data tells a story of recovery and rising confidence. Currently, 70% of household decision makers feel financially included, up from the previous year. Most impressively, Malaysia's global consumer sentiment ranking has jumped 12 spots, moving from 20th place in 2022 to 8th place in 2025. This reflects a deep-rooted trust in our financial system.
Hi everyone, now I will be presenting the recommendations and challenges in improving financial inclusion in Malaysia. First, I will explain the recommendation. The first recommendation is strengthening financial literacy. Many Malaysians, especially those from B40 households and rural areas, still lack basic financial knowledge. Therefore, financial education programs by Bank Negara Malaysia, the Financial Education Network, and AKPK should be expanded. These programs should focus on budgeting, savings, responsible borrowing, and understanding digital banking and Islamic finance products. With better financial literacy, individuals can make wiser financial decisions. The second recommendation is expanding digital financial access. As Malaysia moves towards a digital economy, access to digital financial services is very important. Improving internet connectivity in rural areas and promoting digital banks licensed by Bank Negara Malaysia can help more people access financial services. The use of e-wallets such as Touch 'n Go, GrabPay and Boost, supported by government initiatives like e-Belia and e-Pemula, also encourage wider participation in the formal financial system. The third recommendation is developing inclusive financial products. Financial institutions should offer affordable products such as low-cost saving accounts, microcredit and insurance for low-income groups and informal workers. In Malaysia, Islamic microfinance and micro-takaful are important as they provide Sharia-compliant options. Institutions such as Tekun Nasional, Amanah Ikhtiar Malaysia and SME Bank play a key role in supporting SMEs and small entrepreneurs. Next, I will discuss the challenges. The first challenge is low financial literacy. Even when financial services are available, some individuals do not fully understand how to use them. This can lead to poor financial decisions and over-indebtedness. The second challenge is the digital divide. There is still unequal access to the internet and digital skills between urban and rural areas. Elderly individuals and low-income groups may find it difficult to use digital banking and e-wallet platforms. The third challenge is accessibility and trust issues. Strict documentation requirements can exclude informal workers from formal financial services. In addition, some individuals do not trust financial institutions or are concerned about interest-based products, especially if they are not aware of Islamic finance alternative. So, thank you. I will pass to the next presenter.
Now, I would like to share about the main factor that increase the level of financial inclusion in Malaysia. First of all, digital banking plays an important role. The digitalization of the financial sector through fintech and online payment system provides opportunities for those who have less access. For example, the use of Duit Now QR and e-wallet applications allows individuals and small traders to make cashless transactions using only a smartphone. This innovation not only reduces costs but also makes it easier for rural and low-income communities to participate in the formal financial system. In addition, government policies and the role of Bank Negara Malaysia also contribute. With the theme of Finance for All, BNM ensures that low-income households and small companies have access to financial service. Initiatives such as Sumbangan Tunai Rahmah, e-Beli and Duit Now QR encourage the community to open and actively use accounts. Finally, financial literacy and affordable products are also important factors. Credit Counselling and Debt Management Agency (AKBK's) financial education program raises awareness about budgeting, saving and responsible borrowing. At the same time, products such as basic savings accounts, microfinance and Sharia compliant banking give low-income groups the confidence to save money and use formal financial services.
In conclusion, financial inclusion is very important for Malaysia because it helps people manage their money better and improve their quality of life. When people have access to financial services such as bank account, savings, loan and digital payment, they can plan for the future and handle financial emergency more easily. Malaysia has made good progress in financial inclusion with the support from the government and Bank Negara Malaysia. The use of digital banking, e-wallet and cashless payment system has made financial services more accessible, especially for low-income groups and small businesses. However, there are still some challenges such as low financial knowledge and limited digital access in rural areas. Therefore, continuous effort in financial education and improving digital infrastructure are needed. Overall, improving financial inclusion will help Malaysia build a more inclusive and sustainable economy. That's all from us. Thank you.